A 1031 exchange is a type of tax break. And if you want to understand how investing in property works, then you absolutely have to understand how these exchanges function. I'm Elvira Knips from eXp Realty. This is a strategy which allows the owner of a property held for business or investment purposes to defer capital gains taxes when selling by reinvesting the proceeds into another similar property. The only requirement is basically that the new property has to be of equal or greater value and fulfill a similar function. This allows investors to defer their capital gains taxes indefinitely so long as they continue to roll over those gains into properties that meet the requirements. You don't have to be a rocket scientist or an economist for that matter to see what a powerful tool this is for maximizing investment returns and cash flow. To qualify for a 1031 exchange, both the property sold and the property purchased must be held for productive use in trade, business, and/or investment purposes. This can include rental properties, commercial real estate, vacant land, and even certain leasehold interests, as long as they are not personal residences or held primarily for sale. The proceeds from the sale must also be held in escrow by a third party at all times and used only to purchase the new property. You can't personally receive the money from the sale, even temporarily. The IRS imposes strict guidelines and timelines for executing a 1031 exchange, including identifying potential replacement properties within 45 days of selling the relinquished property and completing the purchase of the replacement property within 180 days. Investors must work with a qualified intermediary to facilitate the exchange process and ensure compliances with IRS regulations, meaning they cannot be related to you or an agent who has worked for you within the last 2 years. Overall, a 1031 exchange offers investors a tax-efficient strategy to defer capital gains taxes, preserve equity, and potentially increase their real estate holdings over time. While it requires careful planning and adherence to IRS rules, it is a valuable tool for investors seeking to optimize their investment portfolio and achieve long-term financial goals.